Welcome back. Joining us virtually is our financial expert, Nick Sapienza. Nick, good afternoon. Happy to have you back.
Hey, Taylor. Good to be back.
It's good to have you. So today we're talking about inflation. We're seeing a lot of prices in various areas of the market kind of inflate. So what's happening right now?
Yeah, so I'll start with inflation happens when too many dollars chase too few goods. Nothing new is being said there. But I'll explain what I think is happening, but I won't make an argument as to whether I think it's transitory or permanent because I think it's both. I think we'll see new price floors in certain areas of the market, like you said, because we've shown our hand on what certain goods mean to us. This is called price inelasticity, where rising prices do little to quench the thirst of buyers. But I won't get full into econ on you. I think, Taylor, that most people are focusing on the dollars part because of the stimulus packages that we've had. Some are focusing on the goods part, but neither are really leaving the shallow end of the pool. We immediately default to a cataclysmic mindset that we'll see double-digit inflation again, that this will be like the Carter years all over again. And I don't think that happens, but I won't go down that rabbit hole. I'll just mention the supply side. For the last year, our options were eviscerated and everything shut down. So did factories, so did plants and manufacturers, et cetera, right? So this creates this massive bottleneck that takes a while for it to show up. At the same time, we were left with a few avenues. Money started to pool up because we weren't spending it on concerts and hotels. And we found these new avenues to get our dopamine boost. Specifically, I'm thinking real estate, meme stocks, of course, and then the daily, thud of another Amazon box hitting the front door. And it's been seen in companies' earnings, right? We pulled forward a lot of demand. And so, of course, inflation would follow. And it's gotten out of hand because this spike was, as I mentioned, simultaneously met with an extreme supply side issue that was either caused or exacerbated by the pandemic. But bottom line is it's happening all at once. It's the horse pill, and we've been accustomed to the IV drip. We've been cooking low and slow for the last decade plus. But I think it's certainly reasonable to see a spike in inflation followed by maybe some disinflation or normalization to where prices are permanently higher, but they're not as high as they currently are right now. Like things are going to fall off a bit, especially, lumber. So two things that caused this reset, I think, very high level, just demand slacking off as we continue to reopen, the supply side not only catching up, but becoming more efficient as we move forward.
Well, Nick, thank you so much for explaining this virtually for our viewers. It's definitely a crazy time to be alive when it comes to the markets. Thank you.
Thanks,
All
Taylor.
right. Let's go ahead and check in with meteorologist Adam Olivier to see what he's tracking.